1 year ago, I set myself a challenge to grow my stocks and shares ISA portfolio from 14k to 100k in 3 years. And let me tell you, it's been a roller coaster of saving, investing, and learning along the way. Now that I've completed year 1, I want to take a step back and share with you how far I've come, my key learnings, and what went well. So if you've been following my journey, or on a journey of your own, or are thinking about starting a journey, then stick around, as I'll be breaking it all down right here with 4 parts. Firstly, kicking off with why 100k is my goal, then providing the year 1 recap and progress update. After that, we'll go through my key decisions and learnings in year 1, and then we'll finish the video off by looking ahead. So let's dive in and go through why 100k is my primary financial goal. This isn't a random number, it's a financial milestone that has huge implications for building long-term wealth. The reason I'm so focused on hitting it is because of the compound effect. Think of it like this: once I build up a solid base of 100k, my investments should start to grow more quickly without needing huge contributions. For example, at 100k, if I get a 10% annual return in year 1, that increases my portfolio in value by £10,000, all without lifting a finger. And the best bit is that I can then get a return on the return. As in year 2, if I made a 10% return again, I get a return of 10% on 110k, given an investment value of 121k at the end of year 2. This is the magic of compounding, and that's just over 2 years. So you can imagine how this trend continues, like a snowball. Of course, the compound effect works for smaller amounts too, but it's just not as powerful as at 100k. This is the reason why the famous investor Charlie Munger told everyone back in the 90s to find a way to get their hands on 100k, even if it meant walking everywhere and not eating anything that wasn't purchased with a coupon. Although 100k isn't worth as much nowadays, his advice is just as relevant, as it's a huge financial milestone for anyone and the first massive milestone in my longer-term journey to financial freedom. After I hit it, I'll probably ease off the gas a little bit and let my money work for me. But first I need to hit 100k, and this is where the 3-year plan comes in. If you want to find out more about the plan, I have a video in the description, but for this video, let's move on to finding out how the first year has gone. To understand my progress, let's first look at where I started. In December 2023, I began this journey with a 14,400 stocks and shares ISA portfolio, with 12,500 in Invest Engine and 1,900 in Trading 212. If we fast forward to today, my portfolio is now worth £43,471, with £42,280 in Invest Engine and £1,191 in Trading 212. So my portfolio has gone up by just over 308% in value, and there's 2 reasons for this jump. Firstly, my contributions. I've been contributing £1,500 every month into this portfolio. Secondly, investment growth. My portfolio has delivered an 18% return this year, which is well above the average for a typical stock market year. I know it's been a great year for the stock market overall. For example, the S&P 500 has returned above 25%, but I'm happy with my 18% growth. That kind of performance definitely exceeded my expectations. So does this mean I'm on track? The short answer is yes. In fact, I'm slightly ahead of track. Based on my current progress, if we bring up a compound calculator, we can see that if I continue contributing 1,500 every month and achieve an average 8% return, I'll hit 100k in 2 years and 4 months, so April 2027. That's 2 months ahead of my original plan, which anticipated hitting this milestone in 3 years and 6 months when I built the plan December last year. So it anticipated hitting the milestone in June 2027. However, just because I'm ahead doesn't mean I'll definitely hit the goal. This year's return was amazing, but it's not something I can expect every year. The key is to stay consistent for me and stay focused on the long game. With this in mind, let's move on to part 3 and go through the key decisions and learnings from year 1. I didn't just set and forget my portfolio, I made some important changes along the way. I removed ETFs focused on emerging markets and battery solutions because they weren't performing as well as I'd hoped, and the long-term prospects for me personally had changed. For example, in the case of emerging markets, I became less optimistic about the future prospects following Trump's election, given his protectionist policies, particularly towards China. I used the money I made from selling these ETFs to double down on 4 key funds. Firstly, the HSBC MSCI World, which provides broad global exposure. Secondly, the iShares MSCI World Small Cap, which taps into smaller companies with growth potential. Thirdly, the iShares Physical Gold, which provides a hedge against inflation and market volatility. And lastly, WisdomTree's Cloud Computing Fund, which follows a sector I believe has long-term growth potential. These adjustments have helped me stay focused on a diversified, growth-oriented portfolio. Along with these changes, 2 key parts of my strategy went well also. Firstly, I stayed disciplined with my 1,500 monthly contributions, which meant being frugal and prioritizing savings. Secondly, I avoided the temptation to panic sell, particularly during times in the summer where the markets had some bad periods. For example, the S&P 500 went down 3% in just one day on the 5th of August. I might have panicked and sold out of fear early in my investing journey in this period, but this time I stuck to my plan and stayed calm. I even invested more during the dip, and by staying disciplined throughout the year, I was able to achieve an 18% return in year 1 and keep on track towards my 100k goal. Looking ahead to year 2, I plan to keep things simple with 4 principles. Firstly, sticking to my monthly contributions. Secondly, sticking to my current ETFs and rebalancing my portfolio if needed, especially if certain sectors or regions become over or underexposed. Thirdly, monitoring for new opportunities. And lastly, making sure I keep learning, sharing, and staying consistent no matter what the markets do. Of course, there are always risks. Markets can be unpredictable, and the returns will likely not be as strong as they were in 2024. However, I'm not expecting the journey to 100k to be easy. This is why I have a plan, and by sticking to my plan with focus and discipline, I'm confident I can reach my goal. So that's the year 1 review, and an update on my 3-year journey to 100k. For me, reaching 100k isn't just about a step to financial freedom. It's about showing that anyone can reach this figure with the right plan and discipline. If you'd like to follow my own journey to 100k with regular monthly portfolio updates, then I'd greatly appreciate a subscribe. But for this video, thanks for watching.